Housing market stuck in a rut. Did you see the article in the San Mateo Daily Journal recently talking about the state of the real estate market in the state of California? Well, I'm here to give you some details about the San Francisco Peninsula and how our housing market is faring. The premise of the Daily Journal article, there were three things. They first talked about the number of for sale units being lower than they have been in the past. They talked about more deals falling through, and they talked about the lock-in effect, where many homeowners had low mortgage interest rates from when they refinanced during COVID, and that was causing people not to want to sell homes. So let's break this down specific to what's happening on the San Francisco Peninsula. The first thing that you see right here behind me is single-family homes. Unlike the rest of California, we actually have more single-family homes on the market than the Daily Journal is talking about for the rest of California. So inventory is actually going up a little bit for single-family homes. Same thing for condos. You can see we have more properties for sale so far this year. This is through July of 2025. We have more properties for sale now than we've had in years past. And then the deals falling through. This is where we differ significantly from the rest of California and even from the rest of the country. We actually have fewer deals falling through. A couple of the reasons for that are that on the San Francisco Peninsula, the custom is that the sellers have their home inspected ahead of time so that the buyers don't have to, and the buyers can make a non-contingent offer. And most of the offers that we get on our properties on the San Francisco Peninsula, or at least the mid-San Francisco Peninsula, are non-contingent, which means that it's much harder for a buyer to simply back out of the deal without having a good cost. The last thing, and this is where the Daily Journal gets it spot on, and this is for the mid-peninsula, for all of California, or even all of the United States, is there is what's called a lock-in effect. If you can see the chart behind me here, so this is dealing with people who have mortgages on their homes. These are people who have not paid off their homes. 62% of them have a below 4% mortgage interest rate, which means that many of those people say, hey, you know what, if I sold my home, and even if I bought a cheaper one, a smaller home, because of the higher current interest rates here in July 31st of 2025, even the interest rates being so much higher than they were 4 or 5 years ago, many of these people, if they bought a smaller home, a cheaper home, their monthly mortgage payment would be higher than on their current home. So it's an incentive for them not to sell. And then you can see the breakdown for the rest of the mortgage interest rate. So great article written by the Daily Journal. This is what's happening on the San Francisco Peninsula. So if you want more details on what's happening on the San Francisco Peninsula, direct message me or post a comment below, and I'll get back to you and let you know what I think of the mid-San Francisco Peninsula market. Have a great day. Chris Eckert signing out.